Good evening, traders. Adam here from Bull Logic doing the market analysis with you. Another down day in the market. No surprise there. S&P finished down 0.4%. Had a red start. Then we moved green. Looked like today was going to be a good day. You want to see that gap lower and then a strong reversal that gives it a lot of strength. Unfortunately, we popped up there into that 1390 level. You can see the strong resistance here. And we just faded. We again faded back below the 200-day moving average. That makes 3 days in a row we have tried to take out that 200-day moving average and just completely failed. So not really looking good here for the bulls. I'm just not seeing really anything constructive on the bulls' part. This was their time to at least get a dead cat bounce out of this market, and they just failed to step up yet again. They've been doing this time and time again. From the highs here, marked on 9/14, we're now down 6.22% in this market. So the pullback, while it looks kind of drastic and mean, it's not that bad. It's still only 6%. We've been trading like this for over 40 days. So this has actually been a very gradual pullback. As you see, our pullback's just been a nice steady higher highs and higher lows until we finally started breaking these key support areas. And then it's gotten a little bit more tricky as we're starting to see some big down days, 1%, 1.5%, 2% down days can make it a little bit more tricky. Now market looks like it's geared, ready to take on these support levels. I went going ahead and drawn these in 1357 and 1330. Looks like we could come down here. If we're not going to be able to get above that 200-day moving average, we're just kind of pacing sideways here. I would expect us to touch this 1357 before we get back here and test that 1420 level. So definitely with a nice bearish outlook going into the market. Other markets, such as the NASDAQ, down even more today. Still not looking good. Bit of a pullback here and just kind of faded. Russell 2000, again, finished on the lows of today, down 0.6%. Looks like it's going to take out these lows. Got support in here at 782, followed by another strong support at 765. Going to have to keep those on watch. One shining star today was the VIX was down today on a down market. That's always good to see, especially if you're a bull. You want to see at least some volatility come out. Volatility has been real quiet. In this pullback, we never made it above 20. We kind of capped it here at this 1967 level. That's always a good sign. See, not too much panicking. When you get a lot of panic, you get a lot of big sells, a lot of hard moves. So it's definitely good to see the volatility come out of the market if you're a bull. Flipping through the sectors, not really getting much here. Home builders is the one shining star, I would say. It looks like they're trying to hold the 50-day moving average. Failed to hold it today. See if they can hold it come tomorrow. Maybe they can get a little bit of a bounce here. Energy, though, tried to hit the 200-day moving average. Failed that. Utilities did a dead cat bounce. They're still pretty much flat on the bottom of being oversold. So look for that to be a slight continuation. Just for maybe a day or two, and then it should start selling off again. Materials, again, couldn't get back above that 200-day moving average. Looking like a good fade. Technology, been murdered ever since Apple has been hurting. Financials look like they're going to touch this 200-day moving average, or at least this 1520 level. And biotech still a bit stronger here in the market. We've been having a lot of biotech releases. I'm not big into the biotech releases, but they've been pretty strong this week, obviously. So the sector's been running pretty strong. The one thing I think that is saving the markets from a take of those supports to a push down of these supports here in that 1358 level is just the fact that we are very oversold right now. I believe we need to work sideways a little bit more. Obviously, it doesn't look like we're going to get a meaningful bounce out of this. Bulls just can't get us above that 1397 or the 200-day moving average. So if we could just move sideways, then I think we're going to move lower. I don't want to see us push lower now just because I don't think we're going to be able to hold it just because we are oversold. Basically, in all the sectors, we were oversold. As you see, just flipping through, oversold, 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 oversold. And so all of these things are just going to be saved just because we need an oversold bounce. We need to work off those conditions, and then we can move lower. So that is, I think, the one thing that is on the bull side going into the rest of this week is just the fact that we are just not ready to push this market lower. Not saying it can't happen. I do believe we are definitely biased to the downside, but we are just not ready to finally make that big push. We just need to go sideways a little bit, continue our trend on this 200-day moving average, and then we can finally push lower and be able to sustain it. So definitely looking for more shorts here than longs. and we're just going to continue to play the market as we see it, but definitely with a more bearish bias. All right, everyone. Good luck going into tomorrow. Talk to you then.